Hello friends, hope you're doing great. Welcome to our channel. This is an educational video and no investment recommendations. In the previous session, we did talk about introduction to stock market, basics of stock market, then stock market participants, stock market products. In this session, we'll focus in detail on to market indices. What are the market indices? What we mean by that? And I'll try to give few examples and how the stock market works. In the previous session, we mentioned that we have two major exchanges, NSE, that is National Stock Exchange, and BSE, that is Bombay Stocks Exchange. And in NSE has created various broad market indices. Now let's understand, take a pause, understand what is this indices. I did talk about in earlier sessions also. Right, if you like to play games, right, let me take this analogy, the online gaming on cricket. What we do is we select our best team of the best players, cricket players. You select 2 3 bowlers, you select 4 5 batsmen and the all rounder, and you make a good team. What is the purpose of making that team? That you try to represent the best of the resources you have, and then you say that okay, this team is performing at a particular pace. Same way, NSE has tried to collect good shares together and try to show that how these shares are performing collectively, and it and they also reflect how India as an economy performing. So let me dive into first indices, and a very famous one is Nifty 50. So let's see, and I have added a link onto the channel itself so you can refer. So if I go to NSE indices, you see this index fact sheet, and here you see Nifty 50, Nifty next 50, Nifty 100, Nifty 200, Nifty 500. What are those? Let's see. Let me focus on any of the one indices. Very famous Nifty 50. Nifty 50 index is well diversified 50 companies index reflecting overall market condition. Nifty 50 index is computed using free float market capitalization method. What does that mean? That means it is trying to reflect the state of the economy, how our economy is performing. And this free float market capitalization, that means how many of the shares of any company are available for public to buy and sell. That is free float market capitalization. Maybe there is a scenario where only 70% of the shares are available free float. That means they are available to buy and sell in the market. That's free float. Okay, now if I would like to highlight this, the performance wise, Nifty started much less than 1000 in 1996, and now in today, after 30 years, it reached to 26,000. So that means 26x of growth in 30 years. So every means, see the compounding growth. So that's Nifty 50. Okay, what are other key indices? You have Nifty 50, that is top 50 companies based on their free float capitalization. Then you have next 50, that means they are from 51 to 100. Okay, and then they collectively come into Nifty 100, that is a collection of Nifty 50 and Nifty next 50. And I'll also focus on the sectoral index. So this is a broad market index category, Nifty 100, Nifty 500. It's similar to your S&P 500 in USA. Now we also have a team formation or index formation based on the sector, like Nifty Bank. It just represent the banking sector of India, best of the stocks. May that be PSUs, that is public sector undertaking banks, or maybe private banks coming together forming a bank Nifty. Then you have Nifty IT, best of the information technology companies coming together. Then you have an index Nifty PSU Bank. It is basically a team forming or a collection of all the private sector undertaking banks coming together, like SBI, like Canara Bank, and other banks. Then you have a fast moving consumer goods, that is FMCG. Then you have private bank, like we have PSU Bank, that is based on, so the team formation or index formation based on a sector. Okay, then you have a thematic, only for commodities, only for energy, only for Sharia, that is uh, uh, Sharia 25, right? That is a collection of all the Sharia related companies. And then you have infrastructure. So that is theme based categorization. And then you have strategy indices, that is Nifty 100 equal weight, okay, or maybe Nifty 50 value 20. Okay, so now these are NSE indices. Same way, if we go to next slide, you see here we have BSE broad market indices. And if I go to BSE broad market indices, you will find BSE Sensex. That's for top 30 shares. How the top 30 companies are performing in India, the economic performance at a country level, right? Then you have focus mid cap, then you have BSE 50, that is BSE Sensex 50, BSE 100, BSE 200, BSE 500. Do you have large caps also? That is based on the capitalization. And now this is your BSE Sensex 30 shares, right? And these are the shares: Tata Steel, Power Grid, Access. So what BSE, that company, that exchange, has what they have done, they collected all the good company, large cap companies together, and they form one bucket, and they said, okay, these are the best companies coming together, forming a Sensex and index. And purpose of that is representing the larger view of an economy. Okay, so that's indices. Indices, maybe major indices like BSE 100 include 100 significant companies providing a broader view of the market. BSE 200 covers 200 leading firms offering an even wider perspective. Sectoral index, like we have seen there, here we have Bankes, that is focusing only on a banking sector. We have BSE IT, focusing on information technology sector. We have BSE FMCG, that is focusing on fast moving consumer goods. We have BSE Auto, that is automobile sector. BSE Healthcare, that is healthcare sector. So now if you would like to invest, you can think through that, okay, can I just focus on a passive investment where I would replicate what BSE Sensex has, or what NSE has? Okay, for that, let me go back and I show you something. So if we see the fact sheet, okay, and a composition of Nifty 50, it's really good, but I would like to focus here, right? One slide which is really making a lot more sense. Yeah, this is one. So if you see here, Nifty 50, which is a collection of 50 shares, right? But in Nifty 50, 33% of the shares belong to financial services. They may be the banks, NBFCs, and then only 13% belong to information technology, likes of Infosys, Wipro, TCS, and then comes your energy sector. Okay, and then comes your consumer discretionary, fast moving consumer. So if you see, 33% only in financial services, 13% in information technology, energy, where your Reliance also comes in, 12%. That's the breakup of sectoral percentage division which we say. Okay, financial services, there are 11 stocks in that area, right? And then you can further read this. So my suggestion to you is that you should read those breakups to, if you want to really do well in this area. Okay, I talked about BSE, and there is a categorization or indexation based on the mid cap, small cap, large cap. Okay, now thematic funds I talked about, based only on infrastructure or energy or commodities or consumptions, right? Now work for you is that you go to these sites. I have already added the links. You go to these sites and try to explore and try to make notes. And if you come across questions, why not just add it to comment, and I'll try to answer all your questions. Now the next topic is stock market working hours and all the details related to stock market. So trading hours for Indian stock market is, it starts at 9:15 and goes till 3:30. But actually it starts at 9 o'clock. But that 9 o'clock to 9:08, that is a period where, that is pre-market hour, pre-market period, and where for that 8 minutes you can actually add your orders, place your orders, and then it gets consolidated for 7 minutes, and then 9:15 market starts for everyone, and then it goes till 3:30 p.m. IST, Monday to Friday. We did talk about primary market and a secondary market. When we go with IPO, that's primary market. When we go ahead with any of the buying and selling of the share in the secondary market on the exchanges, that's your secondary market. Now, as an investor, right, what is your strategy? Are you a long term investor holding the stock for several years? And there is a term buy and hold. We just buy and hold the security with us for a longer period of time. And trust me, there are so many analysis studies which we have done, earlier research which we have done, which reflects that even buy and hold shares perform reasonably well as compared to those fund managers who are taking entries and exits, or even those traders, investors who taking multiple entries and exits. So buy and hold is also a very good strategy. Okay. Now, short term trading, that means buying and selling stocks within a short period of time. This is having multiple categories within it, like intraday trader, like the person who buys a share in the morning and sell it before 3:30, it's around 3:20. And then there is a swing trader who actually buys it when the swing calls come in, or the strategy makes a trade for him, and then he takes an exit when that trade completes. That period is around maybe 3 to 4 days to 3 to 4 weeks, right? And then there is also a positional trader who actually takes a position for few months and runs that cycle and makes the profit. Okay. Then comes a value investing, picking a stock that appears to be undervalued. That's important point here. The investor is only focusing on undervalued stocks, focusing on growth investing, that is investing in the companies which you can get cheaper now when everyone is selling it, and you seeing a value in it, you buy that. That's a value investing. Now, key economic indicators, very important, that makes and break momentum of the economy and the market. That one is GDP, a measure of economic performance. Of that is basically what is an output minus the expenses of the country. That's your GDP. Inflation rate, the rate at which the general level of prices for goods and services are rising. Basically, inflation rate hits us a lot. When the inflation rate is down, it's going down that time, because everything is getting cheaper, the value of money increases. Okay. But when inflation rates are high, that means the supply of money is so much in the market that now the federal banks or the reserve banks will start increasing the rate, interest rate, cost of money. So inflation rate impacts market a lot. And there is a chart actually which we'll discuss once we reach to that point. Once this start, bond market start running first, and after that stock market catches that. Okay. So please understand, there is a huge impact of inflation rate on stock market as well as bond market. And there was one bank in USA failed only because of the they have not forecasted the impact of inflation rate onto their investments. So that really impacts a lot. Okay. SV bank or something. Now, the interest rate set by Reserve Bank of India, and this is an event. Yesterday we had a monetary policy where there was no rate cut. This also influence a lot borrowing and spending of the economy, within the economy, within the banks also. So that's so three. Whenever you hear about GDP, inflation rate, and interest rate, you just give it a focus, that why are they talking about, is there going to be any change? The moment it happens, your market will also show the impact quickly. Then comes the risk and reward. There are major three type of risk. One is market risk. These are those black swan events where overall market either lose or make money. The risk of losses due to factors that affect overall performance of the financial market, like market risk may be when there are policy changes in USA that is impacting us. When there was a COVID hit, that was a market risk. But there is another risk, that is credit risk. There is a risk that the borrower will default on any type or of debt. Okay. Borrower will not make the repayment, right? And the last one is liquidity risk. When I bought a security, now I want to sell, but I don't have a buyer. You see the worst liquidity risk in property market. You buy a flat, but then you want to sell, you don't see a buyer, because that is a low liquid market. Stocks also, when you deal with some type of small cap stocks or penny stocks, there you don't find much of the liquidity. Okay, so these three type of risks are there. Now for you is a few of my suggestions. One is do good research, do good homework. Now this time also I give you a homework that go to NSE and BSE site, talk about, learn, make notes about the indices. Okay, diversify your portfolio to minimize the risk. It not only focus on stocks, focus on bonds also, FDs also, cash component also. Prepare your contingency plan also. Stay informed with news and trends. Set your goals, financial goals, plan to achieve them. With that, I take a pause here. Thanks a lot for joining this session. Please share your feedback. A request, one good thing, and an improvement area will definitely motivate me. Do like, share, and subscribe. Thank you very much. Signing off.